Have you ever felt like you're running on a treadmill that's constantly speeding up? You're working more hours. You got the promotion. You see more digits on your paycheck than you did 5 years ago. But at the end of the month, after all the bills are paid, the balance in your account looks almost the same. Or even worse. Most people in the United States are earning more today than ever before in history, yet they feel poorer. This isn't an accident. It isn't just bad luck. You've become a victim of the invisible tax. This isn't the tax you see on your return at the end of the year. It's the tax that's collected every time you walk into a store, every time you upgrade your phone, and every time you say, "I deserve this," after a hard week. Today, we're going to break down the mechanics of your financial exhaustion. We're going to talk about how inflation, consumerism, and debt work together to keep you in the position of a passenger. Let's get to work. Let's start with the basics. What is inflation really? Most people think it's just the price of eggs and gas getting higher. But that's a mistake. Inflation isn't prices going up, it's the value of your labor going down. Think of your money as a battery where you store the energy you spent at work. You worked 40 hours this week and received $2,000. You put that energy into the battery of your bank. But because of inflation, this battery is leaking. Every year, it loses 5%, 10%, and in some categories, 20% of its capacity. This means that in 10 years, the energy you worked so hard to store could turn into dust. The government might not raise taxes on paper, but when they print more money, they are simply diluting the value of your energy. This is the first layer of the invisible tax. If you're just holding cash and hoping for stability, you've already lost. On the real wealth map, cash isn't security, it's fuel that evaporates. You must convert it into assets before it vanishes. But inflation is only half the problem. The other half is what you do to yourself. It's called lifestyle creep. Here's how it works. You get a $10,000 a year raise. Your first thought, finally, I can afford that car lease, or that apartment in the better neighborhood is now within my reach. You automatically raise your expenses to the level of your new income. You didn't get wealthier. You just increased the cost of your maintenance. You've turned yourself into an expensive machine that requires more and more fuel just to keep from stopping. Consumerism in the US is a religion. You're taught that your wealth is measured by what you buy. But in reality, true wealth is measured by what you can afford not to buy. Every time you buy a liability to look rich, you're paying the invisible tax to your ego. You are trading your future freedom for temporary dopamine. The architects of capital know it's better to be wealthy than to look wealthy. Now, let's talk about the most dangerous part, consumer debt, credit cards, auto loans, buy now, pay later. When you buy something on credit, you aren't just taking money from a bank, you're taking energy from your future self. You're saying, I want to have pleasure today, and my future self will work this off for the next 24 months with interest. Interest rates on credit cards in the US are hitting 25 to 30%. This isn't just a tax, it's financial suicide. You are voluntarily becoming a slave to a financial institution. While you are servicing debt for things that have long lost their novelty, you cannot invest. You cannot build your financial shield. Your debt is a chain on your legs, and the more you consume, the heavier that chain becomes. Most people spend the best years of their lives just trying to get back to zero. They are paying for their past instead of funding their future. Now, I'm going to say something that many of you won't like. Your salary is the most expensive way to receive money. In the United States, the system is designed to tax active income the most heavily. When you receive a W-2 paycheck, taxes are taken out first. You get whatever is left. You work for the government from January to May every year before you even begin working for yourself. This is the third layer of the invisible tax. Companies see you as an expense. If you earn $150,000 as a traditional employee, you might pay 30 to 40% in taxes. But if an architect earns that same money through business structures or assets, they pay significantly less. Why? Because the system rewards those who create jobs and assets, and it punishes those who simply trade time for money. If your only path to wealth is asking for a salary raise, you are simply asking to increase the amount of tax taken from you. You're running faster, but the tax treadmill beneath you is moving even faster. How do you stop this drain? You must change your role in this play. You must stop being a consumer and start being an owner. The first step is the financial shield. You cannot invest if every move you make is accompanied by fear. You need a reserve that covers 3 to 6 months of your total living expenses. These are your boring funds that buy you the luxury of patience. This is the money that prevents you from being a forced seller when the market dips. The second step is converting active income into intellectual or creative income. Instead of buying a new car that loses 20% of its value the moment you drive off the lot, you invest in a system that produces value over and over again without your constant physical labor. Think of it like planting a tree. Hard work at first, then fruit regardless of whether you work that day or not. You must buy assets that work for you, rather than liabilities that you work for. Every dollar you don't pay as an invisible tax to your ego is a soldier in your army of capital. The invisible tax only works as long as you don't notice it. Once you understand the mechanics of inflation, the trap of lifestyle creep, and the weight of debt, you can no longer be just a passenger. Now, you have a choice. You can keep running on the treadmill, buying things you don't need to impress people you don't like, and hoping the next raise will fix everything. Or, you can become an architect, build your shield, upgrade your internal software, create systems that don't depend on your presence in an office. Real wealth isn't about how much you spend. It's about how much freedom you have when everything else gets difficult. The world won't get easier. Inflation won't stop. But you can become untouchable. The choice is yours. I'm Harrison. Stay on the map. Let's get to work.